South Africa begins phase 2 of lockdown restrictions easing. And Zimbabwe softens coronavirus curfew, extends business hours. Let's get the show started with the market numbers, which showed mixed sentiments here in Africa. South Africa's Jrpc index was the only index down at intraday by 0.29%, while the NSE sustained the previous day's gains, rising marginally by 0.01%. Egypt's EGX 30 gained the most by 0.42%, while Kenya closed negative on Tuesday. And major Gulf bosses rose at intraday today, largely helped by gains in financial shares. The Abu Dhabi index jumped the most by 1.38%, while Dubai's index rose 0.92%, helped by a 1% gain for Emirates MBD Bank and a 0.7% rise for Emma Properties. Elsewhere in the region, Saudi Arabia's benchmark index gained 0.41%, with Riyadh Bank rising 2.3% and Araji Bank gaining 0.5%, while the Qatari index added 0.22%. And stocks in Asia Pacific were mixed today, trading as the S&P 500 stateside rose to a new record overnight. In Japan, the Nikkei 225 advanced 0.25%, while the Topix index gained 0.12%. Mainland Chinese stocks were lower by the afternoon as the Shanghai Composite dipped 0.3%, while the Shenzhen Component shed 1.054%. Meanwhile, trading in Hong Kong began at 1:30 p.m. Hong Kong time. Morning trade in the city was suspended earlier due to severe weather. South Korea's Kospi advanced 0.56%, while shares in Australia rose as the S&P ASX 200 gained 0.77%. Overall, the MSCI Asia ex-Japan index rose about 0.1%. In the UK, the pound rose against the US dollar this morning to $1.32, its highest level since 1st of January. Let's get to know from Simon if the currency market and indeed the equities are reacting to the latest inflation numbers. Hello, Simon. Good afternoon again. How are the equities and currency markets digesting that latest inflation numbers released this morning?
Yeah, good afternoon. The pound is doing incredibly well. We'll come to that in a second. The FTSE 100 fell today in early trading after that inflation data came in stronger than expected. Lower oil prices also hit trading in energy stocks. At 1%, inflation is still way down on the Bank of England's target, but it is rising. That boosted the pound and hit shares, which had been expected to open slightly higher. So let's take a look at the FTSE then, all in the green after recovering from that early slide into the red this morning. The all share is up by 0.17%. The FTSE 100 is up by about the same amount, and the FTSE 250 up by 0.14%. Looking at the pound, which has been the best performing major currency of the past month, courtesy of a rout on the US dollar. The standout move of the past 24 hours was the pound going nearly 1% higher than the US dollar, with the pound to dollar exchange rate going above 1.32 for the first time since January. But if we look at it now, it's dropped a little, still up slightly on the dollar, but it's down on the euro by 0.6% and the Japanese yen by 0.2%. Quickly in company news, Marriott share price, it's down 1.64% today. The group already hurt due to a lack of travelling tourists this summer, of course, but it's because Marriott International is facing a lawsuit in London's High Court for its alleged failure to protect the personal data of millions of former guests in one of the largest data breaches in corporate history. You may remember in 2018, Marriott revealed that hackers had gained unauthorised access to hundreds of millions of guest records worldwide in a security breach of the Starwood guest reservation database between July 2014 and September 2018. So it'll be interesting to see how their share price does and whether they can bounce back.
Well, still on data, the cost of renting a property also kept rising in July. What is driving the cost of rent even with the COVID-19 pandemic?
Yeah, it's interesting, isn't it? Yeah, 10 of the 12 regions monitored by HomeLet showed an increase in rental values between July 2019 and July 2020, with 2 of those regions seeing an increase of more than 4.5%. There is one big exception that won't surprise many people, though. That is London. In July 2020, the average rental value in London was almost exactly double that of the rest of the UK. And those high prices and the fact that a lot more people are working from home at the moment mean London rents have fallen by a record 8.4% year on year in July, as landlords flipped short-term lets into long-term tenancies. So lots of tactical moves in the capital to try and fill empty buildings and apartments. In the rest of the UK, though, rising rents are, of course, good for landlords, maximising profits at a time when interest rates are at a historic low, though high rents do prove a really big barrier for younger people trying to get onto the housing ladder. Saving enough for a deposit on a home can, of course, be impossible when you're paying lots of income towards rent and living costs, especially as a Bank of England base rate of 0.1%, which helps those paying mortgages, means savings grow extremely slowly. This comes as the government has pledged to remove the requirement for developers to build social housing in new developments as part of planning reforms. New rules will scrap red tape, the government says, speeding up the home building process. But you're right, it is a surprising fact that rents across the UK do keep rising. I think that's really reminiscent of people not moving to the big cities like London. They're staying at home and they're renting as they usually would, but maybe at a regional level as opposed to in the capital.
Amazon has stepped up its move into Britain's grocery market, extending its relationship with Morrisons, so Prime members have access to the supermarkets group's full range on the internet giant's main website. What more can you tell us about this new move? Yeah,
it's hard to keep up track with Amazon, isn't it? They're doing so much in so many areas. So as you said, Amazon and Morrisons have had a tie-up since 2016 and have been steadily expanding their links, leading to speculation that Amazon could even emerge as a possible bidder for Britain's fourth largest supermarket chain. Both sides have declined to comment on that kind of talk, but the coronavirus pandemic has seen a marked rise in demand for online groceries. Market researcher Nielsen said on Tuesday that the online grocery participation had grown to 14% of the UK grocery market in the 12 weeks to August. The eighth, that's double its pre-crisis rate. Well, Amazon and Morrisons said today that Prime members would, as part of their subscription, be able to receive same-day delivery on orders of more than £40 or $53 for no extra cost directly on the website. For orders worth less than £40, there would be a £3.99 delivery charge. They said Morrisons on Amazon launched in Leeds, Northern England, and will be expanding to millions of Prime members across the United Kingdom in the coming weeks. It will offer thousands of grocery products, including meat, seafood, dairy and baked goods, and prices will be the same as at the Morrisons stores. Orders will be picked from local Morrisons stores by Morrisons staff and delivered to customers by Amazon partners. Prime is Amazon's core retail proposition, of course, costing an annual membership fee of £79, and it provides access to unlimited one-day delivery as well as services such as TV, music and movies. Well, the Morrison deal builds on Amazon's move last month to begin free delivery of its own grocery services to Prime members. So it's going to be interesting to see how that does. There's lots of competition in this space, of course, for home delivery from the likes of Tesco's and Sainsbury's, which are the two biggest UK supermarkets. So it's going to be interesting to see whether Morrisons grows as a result of this partnership with Amazon. Whatever Amazon does, they seem to go all or nothing. So it's most probable they'll be going full in on this. And it'll be one to keep an eye on whether Morrisons can maybe overtake one of the other stores to maybe become the third biggest supermarket in the UK.
We'll sure keep an eye on that. Well, let's call it a day for today. Enjoy the rest of the day and see you tomorrow.
Thank you.
And European stocks advanced slightly this morning, pausing after a strong session stateside that saw the S&P 500 hit a fresh record high. Investors are also paying attention to developments around the U.S. presidential elections. Well, let's have Ulrich Batz now to give us details from the European space. Hello, Ulrich. Good afternoon. Well, the Democratic Party's candidate for President of the United States, Joe Biden, has now been officially nominated. How do the traders where you are view his chances in November, and what would a President Biden mean for markets?
Well, people think that a win now for Joe Biden is likely. He's leading with a big margin, but not everybody is betting their whole savings on it. One analyst told me this week that you basically saw the same situation in 2016 when Trump was lagging behind Hillary Clinton, and then he won in the end. And I hear some warnings like that from other people, too. Joe Biden as a president, he would be very different for the stock market than Donald Trump. It's forecast that he will do a reversal on tax policy that sent Wall Street up and other markets, including the one here in Germany, up along with it. So there would be higher corporate taxes under Joe Biden, but there would be a calmer, more sober, perhaps a more constructive trade and foreign policy that might more than compensate for this.
The incumbent president of the U.S., Donald Trump, has postponed trade talks with China. He said he didn't want to talk with them right now. Was his message having any effect on stocks, or is it the coronavirus the dominant factor in the European market?
I think today it's the coronavirus. You hear more and more voices that are saying that the pandemic, which is getting worse with more cases being reported, more infections, that the present situation is possibly only a foreshadowing of what's to come in the fall. That does not sound good. The president not talking to China, of course, that's not good news, that there's not progress towards a trade deal, a constructive and a good trade deal with China. But you also hear analysts who say, well, that means also that the president can't do any damage and further escalate the trade dispute. So there might be a silver lining behind that development, at least in terms of the views of some of the people here.
And many markets are at or not far off record highs. The S&P just hit an all-time high yesterday in New York. The DAX in Germany is hovering around 13,000 points, but there is more talk of unease about the dichotomy between markets and the real economy. Are you hearing that in Frankfurt as well?
Yes, I'm hearing worries that perhaps the situation is getting more and more fragile with the DAX where it is, with the S&P 500 reaching a record high, and yet the economy recovering, but recovering in a lot of places more slowly than believed. And nobody really knows how far the pandemic can hit again, whether there will be more lockdowns. The fear is there, and the fear is there that the share prices and the state of the real economy just don't go together. So far, nobody's predicting another sharp downturn like in the spring, but certainly there are more voices you hear that are sounding distinctly uneasy.
Thanks, Ulrich. See you tomorrow. And U.S. stock futures were fractionally higher today after the S&P 500 hit its highest level ever the previous day, wiping out all the losses from the coronavirus sell-off. Dow futures climbed 11 points. S&P 500 Nasdaq 100 futures also traded higher. On Tuesday, the S&P 500 rose to its highest level ever. The Nasdaq Composite also notched a record on Tuesday after gaining 0.7%, helped by a 4% gain in Amazon and a near 2% gain in Netflix. And away from the markets, the World Bank has called for a more ambitious debt relief plan for poor countries after warning that the COVID-19 recession is turning into a depression in the most challenged parts of the globe. According to the World Bank President David Malpass, poor countries have been worse hit by the economic fallout from COVID-19, and a growing debt crisis means it is necessary to go beyond the repayment holidays offered by rich countries earlier this year. Malpass explains that as the crisis hit, inequality has become very distinct as the stimulus in advanced countries has been targeted on advanced countries to the extent that a major inequality problem has gotten worse. And Zimbabwe has shortened an overnight curfew imposed to combat the coronavirus pandemic and extended business hours despite rising cases. The overnight curfew will now start at 8 p.m., while business hours will be extended to 4:30 p.m. from 3 p.m. President Emerson Mnangagwa last month announced a 6 p.m. to 6 a.m. curfew, but that had left commuters stranded without transport. When we come back, we switch our focus to Ghana and, of course, more. Just stay with us. Ghanaian state officials and the Ghana Union of Traders Associations have been systematically harassing and closing businesses and shops belonging to Nigerians in Ghana over alleged ineligibility to operate in the country. The Ghanaian authority says the Nigerian traders are going against their Jrpc law. The Ghana Investment Promotion Center Jrpc Act aims to protect the primary interests of Ghanaians. Well, John Kennedy, a managing partner at Bespoke Business Consulting in Accra, Ghana, joins us now to give us his own perspective on that. Thank you very much for joining us, Mr. Kennedy.
Yeah, thank you for having me, and good afternoon to you.
Now, this Jrpc Act, what is it all about? The law contained in this act are so stringent for foreigners. Is it about driving investment or driving revenue for the government?
Okay, so basically, the Jrpc Act was established by the Act 865, and the main purpose for this is to package Ghana and sell it to outside investors, to the world. One of their core responsibilities is also to encourage, promote, and facilitate investment in Ghana. In addition to this, they are supposed to enhance investment environment for potential investors. Whilst doing this, they also make sure to understand what the indigents want and protect the interests of the indigents. So basically, it's not for revenue sake, but it's more for promoting investment.
Okay, now I'm sure you are aware of what's going on between the authorities and the Nigerian traders there. And then there's this argument that what we are seeing is a kind of a retaliation from the side of the Ghanaians, to the border closure by Nigeria, which also affects Ghana's economy. Do you think that is the case here?
Okay, so this case is very sensitive, and we just have to tread cautiously. However, there's a law, there's an act in place that states how business is being run or how business should be incorporated in Ghana. Whilst the government of Ghana is trying to understand how to make sure they match the foreign investors and also take care of the responsibility of the citizens, they also understand that they are supposed to protect their own people. That is why you have a threshold set by the Jrpc Act. Now, the threshold is not far-fetched. It says that if you are a Ghanaian, you are entitled to work in the retail space, which has a capital requirement of $200,000 and below. But if you're a foreign investor, you are coming in, you are not allowed to work within that retail space. It has to be, your capital requirement has to be above $200,000. It has like 3 or 4 different thresholds. Now, they've given an opportunity to make sure that the foreign investors are also able to manage within this threshold. Now, if you're a joint venture, you're supposed to at least have a Ghanaian on part of your board, at least holding 10% shareholdings in the board, and also work together with you to attain a particular threshold. I think that the Nigerian businessmen, if they seek advice properly, they can be able to find their way around this, because there are exclusions to the clause. For example, if you are married to a Ghanaian, and at least for 5 years, you are eligible to work in the retail space. Do you understand? But it looks like they don't want to do this. And sometimes when we advise clients, we're able to tell them that come together, put resources together, and create a kind of threshold that will be more than $200,000, so they can also work in a certain threshold. It's not because Nigeria has decided to close the border. That's why they are doing this. The main reason is that this is an election year in Ghana. The Guta want to sound their own warning to the government so that they can take care of their responsibilities. It is their constitutional right. So the Nigerians also have to make sure that they work within the premise of the law. And there are ways to actually find working space within the law.
Now, Mr. Kennedy, where does the Ghana Investment Promotion Center Act come to play when put side by side with the Economic Community of West African States Protocol, that's the ECOWAS Protocol? Would you describe a Nigerian working in Ghana as a foreigner considering the ECOWAS Protocol?
Basically, consider the ECOWAS Protocol. The ECOWAS Protocol is actually covering the West African sub-region. However, each country is autonomous. They have their own rules and regulations. And whoever wants to come into any of these ECOWAS states is supposed to abide by the rules and regulations of the states and do business within those rules and regulations. So basically, there's the ECOWAS protocol and there's the individual state protocol. And this, I'm not sure this is conflicting each other. The only difference is that there should be free trade between them, which means that there should be easy movement of goods and services within these states, such that each laws of the states has to be respected. Now, the main problem that we are facing here is that Nigerian businesses are getting goods cheaper and getting services cheaper than the Ghanaian companies. At the end of the day, they're able to sell cheaper to their clients compared to the Ghanaian businesses, and it's affecting the Ghanaian businesses. And you know, we have skills. Nigerian businesses have skills to be able to maneuver their ways and get cheaper goods, which can meet the needs of the people. This is where the challenges are. So basically, if they're able to find a way around the remits of the law, they can do business and there wouldn't be any problem.
Very much for sharing your thoughts there, Mr. Kennedy. John Kennedy is a managing partner at Bespoke Business Consulting in Ghana. And South Africa has begun easing lockdown restrictions with more businesses allowed to open their doors. The ban of alcohol and cigarette sales have been lifted to the delight of many. However, there are still some sectors like entertainment still restricted and others like tourism which are allowed but cannot operate to capacity owing to the restrictions in international travel.
It has been an immensely difficult 5 months.
That's a fact many businesses and individuals in the country will readily agree with, added to the fact that South Africa already fell into a recession even before the first case of the coronavirus was detected within. Economic growth projections deteriorated after the government imposed one of the strictest lockdowns in the world that halted most business activities. Isam Tlanga, an economist at Alexander Forbes, says there is still hope for the South African economy.
We need to boost business confidence. We need to boost consumer confidence. We need to do that by putting together a regulatory reform that encourages private investors to invest in the economy. We need to deal with corruption to give confidence to private investors that if they do partner with government in some of the big infrastructure spend that are required to boost growth and employment, their monies will be safe. So far, we don't see that happening. And we just need to move beyond the planning phase where we continue to debate economic policy options and start implementing those policies that we agree on. And there are a lot of those.
While the country moves to increase economic activity, the president stressed that some measures will remain in place to limit transmission and protect the country's health capacity. Event organizers feel they have been left out as large gatherings are still restricted, which include sporting and entertainment events.
We have not been heard in the way that we need to be heard. So I would say that part needs to be built on. And when it comes to the amount of numbers that are allowed in an event, for I would say 95% of our events industry, it's just not worthwhile opening or putting on an event with only 50 people.
Even if theaters open, even if there's a relief fund, and even if we say, yes, everything is good to go now, people are not wanting to go out because they are scared at the moment, because there are reports of the virus peaking in October, and we really do not know when the virus is going to decide to leave this earth or leave us alone. We have no idea.
Hopefully, with the removal of restrictions, responsible conduct on the part of the people will keep the COVID numbers going down. That way, those left out will be back in business in no time. And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.